Good morning. Welcome again back to another episode of Papa Trades Daily. All right, guys, on today's episode, we're going to be talking about a couple things. One, I want to talk about the SPY because we're going to be talking about the SPY every day. Again, yesterday's prediction, dingity ding ding ding, right on point. And we're going to be talking about the MACD, which is what I mentioned to you guys yesterday. There is some interesting stuff going on with the RSI, which is what we just spoke about yesterday in yesterday's video. And anyways, without further ado, let's get to the video. All right, guys, so let's see. I want to zoom in right now. I wanted to go, since I can't go live, I want to start streaming a little bit earlier because I want you guys to see this live action and what is happening. On the first video that we did, I mentioned a gap fill. A gap fill is when a stock opens up and leaves a gap in compared to the previous day. For example, if you look at May 4th over to May 5th. On the closing day, we're looking at the daily chart. We closed roughly around 407.25. We are seeing here that the next day it opened up at 408. So that is around $1 more or less difference, and sooner or later the market will come down and close that gap. It always does, it always has. Sooner or later it always will. As you can see, for example, this is an obvious one. Back in March 20th, it went up and looks like I'm on low battery. I just noticed that. All right, so we look back at the history of any chart ever. Any candle, any price gap will always get filled when it opens one to another, when it opens a little bit apart. So this is a quick play that a lot of people play. It's a quick money maker if it goes in the right direction. But for example, on today's, yesterday it closed, as we said, around 411, I believe was the closing price, 410.93. Today it opened up at 413. It opened up all the way over here. Why is that? Is because in the pre-market there was quite an option. Yesterday we talked about the CPI report being released today, this morning. It came out pretty good, and therefore the market rallied all this morning pre-market. However, at opening, we are seeing a big dump. So what happened is that this action caused that price gap to begin and open up here. Since it opened up right here, the market has come down all the way to close that price gap. And that would have been a good play to start up in the morning, something to look out for price gaps. You would have loaded up on puts right here. You could have played it all the way down to yesterday's closing price, which would be around 411, and you would have made some quick money, and you'd be pretty much done for the day. In, out, easy peasy. Okay. Now, one thing that I want you to look at, right now we're looking at the 5-minute chart, is at the RSI. If you would have seen that movement going up, you say, hey, the RSI is way overextended. We are at around $90. Not $90. We had hit 90 right over here. You'll see it over here to the right, the RSI indicator. And you would say, well, we have a price gap. The RSI is overextended. It's overbought. It should turn around pretty soon. And of course it did. And you can see the RSI coming down now. So at this point, we are back to where we started more or less yesterday. We're in that zone where it's hard to tell what's going to happen. It could easily just come down to 410. I do want to point something out. Yesterday, I did mention that if we dip below 410, we might dip as low as 409, which we did in the pre-market. We could have a bounce and turn around. So although you cannot play options in the pre-market, you could buy stock in the pre-market, and that is something that I'll leave for a next video on how to do so. If you are interested, drop a comment below. We'll go ahead and do a video just on how to buy and sell in the pre-market. But anyways, it did dip down to that. It came all the way up to 414, 411. So we're more or less back at watching the same prices as yesterday. We are going to wait to see if that 409, 410 support holds. If it does, let's hope for a bounce back. If it drops below that, let's go over to the daily. If it drops below that, I would be looking at 405. It's a good psychological level. You also see there is some support right over here for 405. And if that does drop, we could be coming down to fill that price gap that we talked about earlier from March 28. That looks like it had a 395. So we could be coming down as low as 395. So keep an eye out on that. If we do have a bounce back, let's hope to test again 417. However, at this point, it's hard to tell. Now, do take something into consideration. We have the MACD. This is another indicator that a lot of people use. This indicator tends to know when something is going to go on a bullish run or on a bearish run. Sometimes it can just go sideways and mark red or green, as it does sometimes. But it is something to look out for. As you can see right here, we have a little bit of green, a little bit of red, a little bit of green, a little bit of red, and it goes back and forth as the cycles of the market. Now, if we do open up this, I want to let you know the MACD is a Moving Average Convergence Divergence. It is an indicator that tracks two different moving averages of a stock price. The shorter moving average is a 12-day exponential moving average, and the longer moving average is a 26-day exponential moving average. So what does it mean? It means that when they cross these two averages, it can be bearish. When the MACD crosses down and moves below the zero line, or when the MACD crosses up and moves above the zero line. So when these two lines cross, and you'll see them down over here, you have an orange line, you have a blue line. Orange goes above the blue, it turns green, and you'll see upwards movement on the price of that ticker or stock or whatever it is that you're looking at. Works as well with crypto. Here, those two crossed again, those two averages crossed again, and you'll see it down here turn red, and it does begin to dip. So it's something to look out for. Again, another indicator. You can see right here as it went green, the RSI peaked, the MACD starts to lower, decrease, and begins to go red. So this is a good indicator to look out for, especially if you're trading on the long term. You're looking at the daily chart. Again, MACD, RSI, they all change according to the time frame that you're looking at. Normally, when you zoom out, when you look at longer periods of time, these indicators tend to be a lot more accurate. So we're looking here at the daily. Looks like we've had some red, and it keeps coming back red. Now here, like I said, it's an iffy time to know whether it will dip again and go more red. But if it does continue to stay up here, and we continue to see it go more towards that 417, MACD could turn green, and that could be a great sign of another bullish run and some movement to the upside. So keep that in mind. Okay, now there is one more thing that I wanted to go over, and it's just some things to look out for. 5 things to know before stock market opens up Wednesday. It obviously has opened already, but it's still good to know. Where do we go from here? Again, the Consumer Price Index, the CPI report came out, and it came in 4.9% higher than a year ago, which was barely below expectations. Month-to-month inflation rose 0.4%, which means that inflation still continues to move up. The Federal Reserve has been trying to cramp down the pace of inflation with steady regimen of interest rate hikes. But while that's happening, they have signaled that they are likely to pause the increases. we're still far away from rate cuts. Now, push it to the limit. This is regarding to the debt ceiling. Congress didn't yield any progress on the debt ceiling, so all of that has been postponed. Again, the debt ceiling is pretty much the U.S.'s debt, its potential, and every few months or whatsoever, our debt limit has to be increased. It has to be approved. And I mean, we have never defaulted. If we did default, it would be the first time ever in U.S. history. So sooner or later, they should be raising that debt ceiling. Again, we did talk about Disney already, and again, their reports are coming out today. Decent report for Rivian. This is something good to know. The EV sector has been taking a hit. It's been decreasing slowly. Not a lot happening there. So with the decent report for Rivian, that is looking good for Rivian. And again, Jean Carroll triumphs in court. Didn't know if you know this or you are following this. This is in regards to Donald J. Trump. And I believe she won the case. It is a civil case that she has won. It is not a criminal case. And Trump overall is having to pay something around $5 million. Correct me if I'm wrong. But this is not something good that you want coming out if you are running for president. On the next video, I do want to talk about the DXY. DXY is a dollar index, the US dollar index, which basically follows and tracks the US dollar and compared to a multiple number of other currencies out there. The reason I want to talk about this is because the dollar does have an inverse correlation to stocks, and we'll go over that and follow it as we grow together in this video process. Do keep an eye out on Disney. Disney does have reportings today. It's the big one for the week. Just want to throw that out there. It is looks like, I mean, obviously it's one of those that got destroyed, during COVID and all that good stuff. But it is a good indicator. It looks like it has rested for a while. We could see potentially a pretty good upwards movement if report today comes out good. Now, I think that's all I have for today's video. I might do another video today after the market close, but for this morning, that's all I got. Keep an eye out on, that looks crazy. Well, guys, thanks again for watching another episode of Papa Trades Daily. Again, open up your Webull accounts. If you have not done so already, please drop me a message or leave a comment below. I will send you an email. Leave me your email address. You will receive a link to download Webull and get free stock. Free stock is free money. So keep that in mind. Thanks again for watching another episode of Papa Trades Daily. I'll catch you guys on the next one.